I'm Jessica Mitchell for IB Times TV, and I'm here with Kevin Snowball, who's the CEO and head portfolio manager for PXP Vietnam Asset Management, and he's here to talk to us about why you should be investing in Vietnam. Now, Kevin, thank you so much for coming all the way from Vietnam to talk to us in New York.
My pleasure.
Now, for those who are not familiar with what it is that you do, can you talk a little bit about PXP Vietnam and what your objective is?
Sure. Well, we are and were Vietnam's first equity specialist investment manager. We've been in existence for a little bit over 11 years. We've been managing money in Vietnam since the 31st of December 2003, and substantially all of the fund's money is invested in Vietnam listed stocks.
Now, what is it about Vietnam that you think investors should be focusing on and why they should be investing there?
Well, I think it's a very exciting time for a fairly new frontier or developing emerging market, call it what you will. It's on a similar path to China, obviously on a smaller scale, with China having 1.5 or more billion people and Vietnam a relatively small 90 million, but it makes it the 14th biggest country in the world. And it is on a similar path, as I say. So as the economy modernizes and develops, so there are opportunities to be had.
Now, like you've mentioned, that Vietnam is sort of a mini China. Do you think that Vietnam has gained from Chinese firms that have been outsourcing?
A lot of movement from China. Vietnam for a long time has been the +1 and the China +1 formula, if you like. But whereas it used to be a lot of very much low-end, low-value-add garment production, Vietnam's now definitely moving up the value chain. So, for example, Samsung assembled 24% of its global smartphone production in Vietnam last year, representing 10 or 11% of Vietnam's total exports. And they've doubled their investment in Vietnam. Intel has their biggest production facility globally in Vietnam. So it's, as you move up that value chain, so the margin improvements mean that you move from trade deficit to trade surplus, and that underpins the currency and hopefully leads to increased confidence over the years to come.
Now, something that's interesting, the VNI index has been up over 25% year to date, and it's outperforming a lot of the major markets that are over in that Asia region. What do you think has been the main driver for the VNI index?
Well, a lot of it's to do with the fact that we're at a different stage in the economic cycle to the rest of ASEAN, so for Philippines, Malaysia, Indonesia, Thailand specifically. So Vietnam has inflation coming down as the government has introduced or shifted away from growth above everything as monetary policy to attempting to promote a stable development of the economy. So, although we didn't have the hot money inflows that the ASEAN markets did earlier in the year, so we haven't had the volatility. The currency has been the most stable in the region, if not the whole of Asia, year to date, other than the Hong Kong dollar and the yuan, which are other pegged currencies. So, there have been dramatic improvements in the way that the government has been running the country on a monetary policy basis. And that's certainly building confidence.
Something that investors are a little weary about when they do look at Vietnam is basically inflation over the years, as well as some of those bad loans that were in the banking sector. What sort of improvements have you seen since you have been over there?
Well, I've been there for about 11.5 years, so it's developed fairly dramatically over that period. But in more recent history, the problems in the banking system are being addressed. A lot of those problems have been caused by pretty poor risk control within the banks, and that's being resolved. They've set up an asset management company, which is the equivalent of a bad bank, to take on some of those debts. And a lot of those are in the state banks, where for many years there was directed lending to state-owned enterprises, and the state-owned enterprises have been fairly appalling users of capital. So that has led to a rise in bad debts. But it's roughly 10% of GDP, but in real money, if you like, that's only about $15 billion, and it's manageable.
And finally, what sort of frontier and emerging markets would you suggest to investors for a high diversification and some sort of high return?
Well, the only market that I know about anymore is Vietnam. We are 65% below the all-time high in US dollar terms. The market is, in spite of having had a 19% increase last year and a 20-odd% increase year to date, is still way behind its all-time high. We're trading on 9.5 times 2014 earnings, which compares very well with, very favourably with a historic trading range, albeit over only 13 years of between 8 and 35 times. So we think there's still plenty of upside, and as the country develops and modernises, then we think that will certainly come to the fore. And because the government are in the process of or about to increase access for foreigners by raising foreign ownership limits and then increase the supply. So you'll see a market which becomes bigger, where you get more access and more choice. And as markets achieve scale, so more people get interested in them, so more money comes into them, and hopefully they continue to go higher.
Well, Kevin, thank you so much for taking the time and coming to speak to me today.
My pleasure. Thanks for having me.